Hello, this is Huskins, your Forex mentor. Welcome to the daily review of April 12th and the preview of April 14th and 15th. Thank God it's Friday. Wow. Um, this is me and this is my son. We are hugging each other. And sometimes I like to see these pictures. I have them in my office right in front of me all the time because I like to constantly remind myself, why am I into this business? Why am I a forex trader? Is it because of the awesome amount of money it can get? Yes, perhaps, but I could do so many other things and get the same amount or maybe even more amount of money. The reason why I do this is so that I can be independent and I can spend time with people who matter the most. Let's start with the thought of the day. When wind blows, some make walls, some windmills. Wow, that's such a powerful quote. All of us are going to face some or the other adversity in life. There are certain people who turn those adversities into positives and make a life out of that, and there's some who just, you know, try to uh, blame them, blame the world, blame God. Why? Why me? Let's discuss our results. Today we had a gain of 30 pips, though there are a few people who made 40 pips, but 30 pips is what we would have made if we stuck to the trade plan. Um, we were targeting 45 pips, but I also mentioned that we'd get out of the trade at before Bernanke starts speaking, and he can maneuver the markets in any direction. So that's why we closed out with a gain of 30 pips. Now, the total trades taken so far are 38, 31 wins. That's about an 82% winning ratio. Now let's discuss what was this trade about, right? This trade was about the retail sales. We bought between 5 to 10 minutes after the report, and the trade was based on the fact that we'd expect Euro USD to move upwards. So when we actually bought from the 6.2-ish area, the market did go against us a little bit, but nowhere close to our stop loss. It turned around and we exited at 12.25, which is at about a 30 pip gain. Had we not had this restriction of exiting when Bernanke talks, perhaps we could have made a 45 pips, but it could then go any other way. It could go down and take us out because most likely by that time we'd be at break even. So it's a good call. I'd take this 30 pips. So let's discuss this. Retail sales in US dropped in March by the most amount in the last 9 months. Now this is because the employment slowed, and the household ended the first quarter on a softer footing. The 0.4% decrease, the biggest since June, followed a 1% gain in February. So last month we had 1% gain, but this month we had a 0.4% loss. And let's see what happens. The US stock markets drop but pull back as retail sales falls. Commodities tumble and stay down. Now this is a very important phenomena which is happening. We need to understand how the markets are reacting. So let me pull up the charts really quick. Okay, so this is the US 30, that's the Dow Jones Industrial Average chart, and this is the daily chart. So let me zoom right into it, all right, and explain to you what is happening. Look, today we had bad retail sales. Everybody knows bad retail sales cause a knee-jerk reaction on the Dow to go down. But the Dow goes down, and what does it do? It retraces back completely, or it does not. Um, it does not close down. Let me give you a few other days in which something like this happened. You know, goes down. Nah, I don't want to sustain a down price and closes up. Goes down, doesn't want to sustain a down price and closes up. Goes down, does not want to sustain a down price and close up. While as when it goes up, it almost always is sustaining the price. At least it is on the 25% close to the highs. Look at this. This is right at the highs. Okay, this one closed in the middle. Look at this candle, right at the highs. All right. Now let me give you a comparison of US oil. This is, we're going to look at the gold charts, but I just want to, for comparison with a commodity. Look at what happened. It went down and it stayed down. This is nearly at the 25% of the low. So we need to start understanding what is actually happening in the markets. More on that later. Stocks drop but pull back, and commodities tumble and stay down. Now, Goldman Sachs plays predictor in chief, sees S&P surging by the end of 2015. That means in another 2 years, or 1 year and a bit, by about 20% from current prices. Didn't I tell you yesterday the smart money is slowly and but surely attracting the buyer carrot. Oh, come on, dumb money, come on, join me. We're gonna have a party. Come on in. That's exactly what is happening right now. The um, there's something which I really want to share with you: an expansion in the multiples. Right? So what does the expansion in the multiples mean? That means that we were talking about the uh, PE ratios. The PE ratio was a year ago was 14.37, and right now it is 16.28. So basically right now, on an average, it'll take a company based on its current earnings about 16 and a half years, if everything goes well, to make back the money of the price of its stock. And what's Goldman expecting now? That these multiples will increase. So what is happening right now? We have to understand that they're getting the dumb money slowly but surely inside. And does this mean that I don't expect them to be right? In fact, I expect the prices to surge by about 20%, but I'm not going to um, say that it is a sustained surge, because it's not based on the economics. It is based on speculative, inflation in the stock markets. Now, no more shine. Gold plunges into bear market territory. Now, what do you mean by bear market territory? Whenever a stock or a commodity falls 20% from its high, it means that it has entered the bear market territory. 20% is the amount to start calling it a bear market territory. So I'm going to share my gold chart with you all really quick. All right. So this is my gold chart. What was I expecting? I was expecting gold to get into this band out here, keeping in mind the multi-year lows which were held previously. But now look at the way gold has fallen. Gold has fallen, considerably, and look at another important thing. Where has gold closed? Gold has closed right down at its low. So it is a bear market right now. And is it time for us to buy gold, or is it time for us to sell gold, or is it time for us to stay in the sidelines? Now I want to share with you the commitments of traders. All right. Now, if the people out here who've been following me for over a year, the last time I had a buy signal issued in gold was way back in July, I guess. All right. And I'll tell you what that buy signal actually was and what was it based on. You see these um, net non-commercial position, the speculators, and the price of gold. So now in July, yeah, about right now, I had said we'd go long on gold, and that was based on the fact that the net speculators were increasing their position, and the price of gold was uh, wa- had significantly gone up. So I had said that now is the time to buy gold, and let's see what happened from July of last year. This is about June, from July of last year. This is where I'd issued a gold buy signal. All right, and then look at the market go up. All right. Right now, I am not getting that same signal from the commitments of traders as of right now. I'm not seeing the net speculators increase their position at the same time gold started to increase. I'm not seeing that. Once I do see that, I will then issue a buy sell, so buy gold alert. Till then, I'm on the sidelines on gold. I'm not selling gold, but I'm not going to be buying gold, not right now. Now let's preview next week. All right, so this is for April 14th. We're going to have China's GDP, which I'd like to watch, but I don't have a trade plan for that. And for April 15th, uh, we have Kuroda speaking. Basically, one of my trade plans for this will be sell the yen. Whenever this guy is going to talk, I'd want to sell the yen. I'm going to, give more, give a detailed explanation on that a bit later, maybe on Sunday. Well in time for this 2:15 a.m. trade. Besides that, we have the monetary policy minutes, but I do not trade that. I don't have a trading plan for that. So till then, till my next release, have a fantastic weekend and spend time with your family. Like how I mentioned, always remember why you got into this line, and don't let Forex take that away from you. Bye for now.